Okay, so next week's coming, and I put up the weekly chart of 16, well, actually 15 currency pairs plus crude oil. I'm using the crude oil as kind of a dollar index, I guess. But I was just going to do a quick trend line analysis. Current state of affairs is that crude oil's been banging on this 1, 2, 3, 4 times. So it looks like it's about to break out the upside. I think maybe they're done. Major trap here for the bears. If people are trend continuation people and they're selling these lower lows right now, they're in trouble. So they're locked in. And there's another trend line. I guess if you wanted to get all like super historical about it, coming back to this, once we creep over that corner, maybe it's, obviously a huge rally up into last known monster low. So we go into a trading trap range now on this. So next, yeah, it could keep going down, right? This seller's argument is, they just picked up more sells there, and they're going to ride it down to retest that wick and bail. So all the, all the people that are like, oh, it's just a great place to sell right here. I mean, forgot. But so everybody's got, but this is 100 pips. This is like 10 cents here. It's a 100 pip grid on top of crude, so it looks kind of crazy. Next item up for bid is the pound to the yen. And here it's painfully obvious without too much, without, straining your frontal lobe here. It's down, right? Obviously. Here's another story of a possible trap for the bears. Everybody has their supports on the weekly closing line, hopefully right there. Became supposed to be support, didn't work out. Then drag this down. You have the next support levels like way deep, but you don't always retest the apex of this triangle down here. Some of these markets never look back. When they're on a tear, they're on a tear. Like you're hoping that it comes back to, and this is 100 pip stops, mind you. I mean 100 pip handles on this thing on the weekly. So you have another 100 pips deep, and it would seem incredible on the smaller time frames to watch it crush down in here, but at some point we could come all the way back to there. So that's always a possible price too, and certainly this is not unheard of that it comes back to here. So it's a cluster built around this triangle. So every little triangle gets its own little pocket of orders. And so if you're going to step back and in this style of trading, you could set all these orders up for the whole month ahead, I'm sure, right? I mean, if it ever comes down here, who's not buying, right? You have to be out of your mind not to buy it here. You could put a ABC on there. Problem with the whole Gartley world is that you're not looking at what's going on right now. You're looking at this kind of look at echoing the past. That doesn't matter. It doesn't matter now. You don't need a PhD, right, to put a. This is a 300 pip wick. We're below that right now. If these guys are trapped and they're like, oh yeah, it's just going to keep crushing down. Guess what? If it stalls out here, obviously, accumulating right now but you have to accumulate. You couldn't just buy in there hard and it's going up. Yep, I'm a genius. And certainly this channel is pretty steep, right? These usually don't last very long. In fact, that this is nothing but just a let go of the pressure to just accumulate more here. And certainly on the larger time frame, this could actually be in a big giant. The pound's going to crush the yen or something, or at least for the next week. Who cares if it ends up ending up taking out these highs from, the end of the world up here. And here was another classic triangle formation. You can clearly see it on close. Can never see any of these patterns on a candle. You can't fight these trend lines. I mean, you could say here, I sold it, the trend line got stopped out. You could say that. But look how this pivot, look how this double top becomes a bottom. That's the rollover. So Works really good on the weekly. Now you just take this, once you find the rollover fractal, you take this and drag it back, copy it, hold down the control key. You can see it's a perfect like breakout point, right? Breaks out, comes back, because that's the how much spring load it needs before it can make another price pulse. Once you can clear that trend line, breakout, pull back, and it's kind of a terribly slow drift up, which is always painful if you're in any time frame. I don't care who you are. If you're long this because you know your target's up here and you waited like, I only waited 2 years. I mean, I got in here and 2 years later I got out here. I mean, sure, right? Don't forget. I mean, there are some serious pullbacks along the way. So if you had your trend line like this and you were like, oh yeah, it's gonna look at here, you got clobbered, right? I mean, this is when, if you're gonna draw trend lines on close, this is where they would trap the bears because they would think, oh yeah, look, it's going to spill down and start cleaning house here. But that happened later after one more, and you can see here that this is the failure to make it back above that line. So you have to fatten this up a little bit. There's a doji right there where it caved in. So you have to do it like this more like, but you know, in the end, this should be almost perpendicular to these lines. So yeah, there's definitely a big bounce is coming here. If it ever crushes off these, right? Psycho bounce. Yeah, this video is really for people that have day jobs because you can set up all these trades in advance. The next one up for bid is this one's getting kicked. The euro's getting crushed against the DA. This is another DA trade. Now here's a beautiful channel that we just keep walking in. Now you'd literally have to get in and out along this channel to make it worth your while to trade this, because if you sold here and you're waiting for it to make money here, you're being tortured by 400 pips swings along the way. What's the point, right? Just get out at the double top on the weekly, right? Just get the hell. I mean, right here you're buying, right? Who's not buying here all the way to here? Who doesn't have a buy limit down here, right? So I put my buy limit right there. If they come sucking into this vacuum here, they're stepping into it right now. You're like 1 pip from taking this vault out. This is like the vaults in the pyramid here. It comes down in, it crushes in. Scalper's dream, at least the swing trader's dream. This is obviously the weekly chart, so, but you know, it's supposed to look like this in the end. It's supposed to be in a perfect world. You know, this is where they trap and this on a 5-minute chart, it's a great trade, right? You have your buy limits here. They come in, they trap. It doesn't work out. This bottom does not become a top. So this failure for this to happen for all the channel projectors, or the market is on a momentum projection of its own. But these drift down here where they trap these guys. Gonna just keep on churning your account, basically. Like, I know you might have sold here and you're like up on the trade right now, but the fact that you didn't get out here and you rode it to here, you waited like, I don't know, what is that, like 3 months? You just want to kill yourself, right? So it really depends who's being trapped. Now here you can make the argument for the trendline break crossover. Kind of a nice, it actually happened kind of nicely there, is on this, let's go back to my try mode. Right here, this break of this trend line finds resistance in a down channel. This is a drifty down channel. You're still range trading that all day long. You don't have to worry about the trend because that's a weekly chart. I mean, if you're scalping that on the week, your orders are literally like, so your next buy limit's going to be down here. There's also a big cluster of pivots here. So every time the market makes a zag, that's a pivot. So it's not really that complicated. Every zig and zag's a pivot. So this is a pivot cluster here. And so you can see the trap here that Sure. Of course, these traps are huge. I mean, this is like, this is like everybody's like, oh, it's definitely going, and then they just actually find support there, come back into this last known low, then down, then trap these guys. Then it just rips their face off and takes out 4 weeks of. But these kind of moves, when it's going down like that, you're just buying into it, literally. I mean, if this is a 5-minute chart, you're just pulling the buy key, or you got limits running in front. There's no way around it. These giant sell-offs here, even if you bought here and you wrote it out to here or here and your stop was here, you see some of these things, like right now, this is weekly, you got all week to get into this trade, for God's sakes. But yeah, definitely, when it comes down this 100 pip vault down here, my God, what the hell's going to happen? And if it does crush down, I would definitely be buying for the bounce at least back to conservatively. And then the next thing is if it blows through all those orders, you would be buying down here. Or you're just putting in buy stops right now. You're slightly long on this thing. But I wouldn't get too excited. Yeah, so wait till they crush it another 100 pips down coming into next week. That's if you like to trade with 50 pip stops, though, because you don't want to miss out on a 300 pip move in 1 week if you can put in a 200 pip stop to make this. Yeah, I mean, good Lord, that just that one setup alone on the weekly, you just made more money than. Of course, you had to wait a month to get paid. But, yeah, these are, weekly chart, like, obviously, right? Triple top becomes a bottom. And these are stupid setups. Even the guy that put a buy stop here is winning. Not that I want to. Well, of course, the sellers were typically coming in here, and I'm sure if you went down to the daily, you'd see a top become a bottom there, like a little baby, like here's a bottom, became a double top. And these kind of drift trades, this is the slow churning. Yeah, it's in a downtrend, but there's always that rip your face off because it's been, I've not seen anybody talk about the volatility of these markets. It's all about volatility. I mean, if it goes sideways too long, and this unbelievably, like on the daily, this probably looks like the most amazing. This is the argument for trend trading. Oh, look at him. I did say, yeah, but if you were locked your margin up for this long and then you finally got paid, you got to think about that too, I guess. Here, even the guy that had a buy stop here to get picked up, and this big move is just fueled by the fact that there's all this, the people that sold here are saying, oh yeah, this is just going to go down like this. The moment of truth is always the triangle. But right now you're in plunge phase. You're in psycho swing mode, so I'd definitely be buying on that one. Okay, I'm just saying. So go to the next item up for bid here. Oh, can't get on my draw mode. Computer's dying. Okay, so next currency pair is so this one you're buying if you can. This thing, I think it's going to tank. I think I duplicated 2 currencies here. And we just screwed that up. But dollar CAD, I think it's still going to melt. Still melting. It's like dripping down. And this thing had the most spectacular run of anything since sliced bread, really. This channel is so like climaxed right into the top of this channel on the weekly. I just don't have the patience for this trade. But here was the last known doji entry, pullback, failure to sell off. Many times it refused to give up the ghost, and even in the most, let's see, if you were to put a trend line beneath here, you'd have to say the problem right now is that this is your major trend line. There's like almost 3 hits there. You're right on it. It wouldn't take much to crack that puppy back down to getting in here. Hey, you maybe get in here for the bounce, but I mean, it's scary looking. I've seen these setups where I thought, yeah, it's in an uptrend, but my Lord, when it goes sideways like this too long, and when it does that on here, even this here is kind of, there's so much money to be made right there, even though you're really not screaming on this chart. This is a weekly chart, though. I think you got to take that into consideration. And yeah, the thing could come flying all the way back to this. But look at this top become a bottom here. This is really pretty, you know, if you're, there's only so many windows to get in. And the sell window here was the fact that if you built the last known steepest channel you could find on here, it would have to be, if you just started from this low, right? This is a weekly chart, so you've got 2 lows there. I mean, just quarting off that, I mean, that's insane. I mean, that's, if you copy that back here, it's a move just like this, where it's literally screaming through that channel, and then it just dies. You know, this is, it's like a rat running through the drain there. And so on the downside, you know, I mean, you don't have that thing yet. You don't have a, so if this is the rate of rollover, double top became a bottom here, you copy this in the future. Yeah, you could rally back up into that maybe. But I guess that's, you know, one of those geometric echoes in the market people are looking for with those garlands. And here I would find more support at the bottom of the last known pivot channel here that could be forming, right? But that looks like it's still dripping. If you're long and you think, oh yeah, it's going to go to the moon, Alice. I'm not going to go monthly. I'm not going to torch you with the monthlies or zooming out. I'm just trying to do like a normal, like we were supposed to do weekend update. You know, it's supposed to be like this. Here it's going down, duh. You know, take off your hard hat. You don't need one. You need it. You don't need use this redneck trading here all day long. So, hey, you can come down here, right? Let me build the channel off. Here's the Andrews pitchfork. Here's the middle of the fork. Sure, it's tanking, right? But who's not buying these scalps? So here's the top became a bottom, broke out of this channel. Copy over here. You got a double bottom here. Yeah, you could touch off this. Sure, my buy limit's here, right? For the bounce, but we could crush all the way back. I've seen these things. You know, you think, oh yeah, tops become bounce. Not when it's going to hell in a handbasket, because it's going to come probably have to come back into this stuff and just crush and then bounce maybe. Like, look at this wick here. This is when the markets came unwrapped in the summertime. And look at how it bounces. Look how that was a big trap here. All the way back to, so this is another one that still has more, so a little bit more dripping, possibly like leaky faucet down into here and here. But you know, I mean, I'm not buying here. If I thought it was gonna come down here for a bigger bounce, so no, I wouldn't buy here. But you know, I guess if you're eager, you know. I'm not going to go to the daily because it's pointless, but you can imagine what the daily looks like. I mean, the fact is that you're only 100 pips from another smash down into here. So, you know, if you have a day job, you know, sit it out. Like I said, this is for day job people. Put your buy limits low there on that one. This one, it's showing some signs of life finally. So, this could cross over now. This could definitely be a problem. This price here. If we flip above this, forget it. Katie bar the door, because it's going to slam up into this. Probably would be the logical. I mean, there's really nothing. There's pure free fall through this window, but there's a doji right here, so I would definitely get the hell out here. You know, right in the body of that doji, which is just above where they're going to probably, you know, everybody will get excited about it here and they'll jump on. Just like all these other failed attempts to get out of this box, but the closing box price is here, right? It's just right there's a triple top. There's a quintuplet, sextuplet top there. Of course, it's 100 pips, you know, but I'm buying here, right? You're buying down here, last known pullback zone. And if you buy here, your target's got to be, of course, you can still have scalps down here too. They just make like 50 pips, you know. Risk 25 to make, so you can put a cluster in there, but you just drill down on the smaller time frames. But it pretty much looks like that, and they could kick it all the way back to here. Don't forget. So I would just get in it right in there on limits and try to buy 50 pips deep on tonight. If it pulls back, of course, I'm just scalping that all day long, and looking at the weekly, it looks painfully obvious that if it pulled back another 100 pips, that you're going to have a big battle zone. And these big fights that happen, these are just huge money makers. I mean, this is a 200 pip battle zone. I mean, just look at this. Look at this nonsense. I mean, this is range traders' dream on the other time frame. All this garbage that, you know, getting stopped. This is 300 pip wick. You know, it's crazy. So I would say, from a scalping standpoint, this keeps banging on this price, and of course here was the whole analysis on the weekly was just to wait and wait and wait, I guess, for them to break this trend line. You know, that was the one everybody's waiting for. I'm sure, right? Or the market was just congested and now here's I kind of screwed that up. It's right here. So we're still in the process of maybe breaking this trend line. The early breakout was back down off of this internal, like here, you would have a tighter. This is like a manually adjusting moving average. You just take off the next pivot there. So the early guys, people that were gonna, I mean, obviously you want to get in here. The first break of that trend line. Boom, comes back. Wow, that is the biggest, grandest move in any market, is to complete paint into a corner and then explode. So, not exactly happened on the top side here because it's very drift up, breakdown. With these hard moves like this, oh my God, this thing here, Jesus, that was ridiculous. That did make a higher high for like 6 weeks, right? So definitely that's coming back into just always a tradable range. Gotta love that. And so the next one here is the euro versus the pound. You've got to watch all these pairs. This is one of these kind of choppy markets because these are two guys are neighbors. But here you broke this trend line. Everybody's all excited. Got a bigger trend line, goes back here. So big break out, and the idea was to buy down here at the this is one shoulder. You have to assume this is the head. You have to assume that's the shoulder, and not that you couldn't have traded these head and shoulders here. All this chop, all these chops are really just about placing orders on the edge of the market because 80% of the market is chop, and with an occasional excitement. So another problem is that a lot of people, these trend continuation people, are just getting chopped to death. I don't know how they're managing with one trade and one stop and making a living, but I guess you can do it. Like, I don't know. I can't trade. I have to trade automated, so I have to trade with a button assigned to a certain risk ratio. Because if I start going like if I start manually trading, I'll miss the move by the time it happens. So I want to have my orders always kind of pending out there and being exposed to an entry. But this kind of retest down here, I mean, you had to wait a year for this setup. You know, this is like you could have made money during this whole accumulation phase that caused this run up. And there's a tighter, you know, whatever they call supply zone, demand zone down here. If you go off of this head and shoulders here, the very bottom, the most inverted head and shoulders, upside down head and shoulders that you can find on here. And for the people that were trading this whole meltdown in a channel range situation, they always have to cover here at the edge of the channel. The thing about the pitchfork traders is they're going to enter and use this as their moving average, the center of that line. So they're always feeding off of this. Like, okay, that's their pivot. See the thread through there. It's a little bit, you have to drag it to here. So you can see it keeps rolling over this. Finds support, crushes down, bounces off the channel back in. And always pivoting around that. You can make that a little fatter. Got to give the market a little bit because there's a spread in the market, so you have to allow for the spread, which is giving you those baby zigzags. Is sometimes the spread will expand and the bid will expand too, but you can't see the ask on here, so unfortunately, you're kind of looking at a perfect world in hindsight, because at the end here the spread went to 10 pips here. Another thing to consider is the spread on these currencies, so they'll kill you too. They'll make you want to kill yourself. This is going up, obviously, right? But definitely you're going to get in the pullback here. I think it's painfully obvious that if you got to buy low, sell high all day long. So you have buy limits here. That's, I guess, pretty silly setup. And then if they stop you out, put a buy limit down here. It's really range trade. I would never trade this thing. It's just too much to pay attention to, I guess, for the breakout pullback. This is going to be way down here. Breaks up. That's the pullback. Wow, sheesh. That's ridiculous. I don't know. I guess you could trade this pair. This spread's not tight. Anything above this is 10 pips on close. You hold this over the weekend, and you're down 10 pips on everything you're in. I've been there, done it. It's brutal. I mean, but yeah, I mean, obviously this has got its own kind of drifty, but in the end, it's about how many pips. Like this is, yeah, breakout, rollover. You waited weeks for that. I mean, this you gotta realize you waited a month for that setup. Yeah, it's a good setup, right? And this is a great example. As weeklies give you a beautiful view of perfect world, right? Because there's so much smoothing of. It's a weekly chart, for God's sake, right? I mean, 3 years of data. You can structurally say all sorts of stuff, but yeah, and I can also say, when they come up here, like, look at this window for selling. My God, I mean, range, is it ranging or me? But once they take that out, in the end, maybe this year, right? Maybe it's going to be like, forget about it. It's going to go to the moon. But it could still plunge back into here, and you could make money off the bounce. So it wouldn't matter. It just wouldn't matter. It's basically, if this was the 5-minute chart, you wouldn't trade any different. It's just here, it's going to take you may be dead by the time some of these orders fill. They may be the best trades in the world after you're dead. People say, remember when he put down that trade? And they go, yeah, that was a great trade. Too bad he wasn't here. So I guess if you're impatient, you're screwed, right? But this video's for people that have all day to place orders. Now here's we got a situation here. This thing's about to go north, I think, pretty hard, New Zealand. But if I was short, I'd be getting scared at this point. I think I'm going to do some house cleaning on these people's stops and smack up into here. I don't know. Maybe it is going down. This is a trend continuation theory here. Look at, yeah, I'm selling right here at the trend line. We're going, yeah, that makes sense. But you could get clobbered here pretty soon. I guess this is your channel. It went outside the channel and went down so hard there. I guess this is your and then the bullish argument is this stuff here. This is about the rate of change for the bulls. They're able to that's your rollover point, I suppose, right here. Failed to that doji. This one's failing too, so yeah, maybe they're geniuses. They sell right here, but these things don't always resolve. After a while, downtrend's done with. That's a weekly chart, so. But definitely ripe for the scalping here, right? Your buy limits are down here where they're going to come after everybody when the news comes out. You make about 200 pips with a 50 pip stop. They're being. That's I don't think so. I think you're lucky if it goes down 100 pips. In my mind, if anything goes down 150 pips, I'm buying a little bit of it. If that happens, if it drops 10%, if it drops 5% in like half an hour for the last half hour, wow, I'm in. So I'm just going to buy it. I'm going to, like here, if this is a weekly, you'd be like, when's this thing going to retrace? Oh my God. All the way to here before you even get a chance. Like this doesn't even, that's why you would just, this is nearly 1,000 pips from this wick bottom to here. So a lot. I mean, I just don't see anybody talking about the pips on these videos of money. How much money you need to risk. Sure, the spread's kind of bad on close, but that's just a good old dollar. Let's go into the dollar now. Next one up for bid is the, we already did that one, unfortunately. Another buying opportunity down here. Keeps tanking. This looks like a big drifty situation. But yeah, here was the channel for all these people. They were riding until the party was over. I guess they kept buying here. Another chance to buy, I guess, right down here now. I can only see what's right in front of me, but yeah, you could say, you know what, trend line to break here is going to be. So the more compression you get, the more these things move down harder. The harder the move down like this, you can really bank on quite the retracement, quite the violent. This triple thing's unsustainable. All the trend traders are getting on here because they have a channel that looks like this, and they're like, oh, it's going to keep tanking. This is too fast of a move to be true. This is nothing but a washout of every bull stop that starts here at this wick. So see, you took out the double wick, that weekly, and just crush. And the reason why it goes down so hard, even takes out this, is because, and that becomes the pivot back out here, that wick. But the thing is, it's just filling stop orders. I mean, people just piling in. It's so unsustainable. Of course, the breakout here wasn't the best in the world. I mean, if you waited for that breakout pullback, that's like a confirmation entry. You know, finally breaks out, and then you wait for the pullback, and then this top become the bottom for one last rally. But typically, all these rallies are going to die out if you're in a larger down channel stairway, which you kind of knew because you could draw this, right? You could pick up this. So it goes into market goes into a triangle, but it's the current triangle. It's not the triangle from the past. It's everything projects into the future. So you're always looking at it like this. You know, these two tops exist. You're expecting some type of problem, not only because of that touch, but because of the last known support in the market was this double bottom, triple bottom. So that was, but these trades don't come along but, you know, once or twice a year. Like if you bought this low on what you perceive to be a trap for the people that sell, thinking it's going to go down, and you contrarian entry that, plus you can see the velocity of this thing on the daily is probably just mind-blowing, right? This is probably just, you can't believe it. And there's like a doji kind of in the middle here where it went bent. So I'm sure there's a triangle there. So there's an equal price pulse move where it goes down, pauses, goes down an equal amount, double magnitude, then comes ripping back for the retrace, and everybody bails right there. Because the people that bought there, trying to play the range game, they got a cover, you know. Then it comes ripping back for the retest, and then you get this drift up situation. But yeah, this is getting very, very violent. Australia versus the yen, brutal. So this could be the big trap, and getting in here, this double bottom right now, this week for at least the scalps of it. But you got to be thinking, you got to run 100 pip stops now. To make 150 pips, to make 200 pips, you got to run 80 pip stops, 50 pip stops. You got to break out these giant risk orders. So I don't know if people are up for that. I see all these trade recommendations, and nobody talks about the pips. Nobody talks about how much money it's costing. I mean, these markets are humongous. They're bigger than you can believe. They're deeper than you can believe. Like, look at the sell-off here. Are you kidding me? Come on, this is like 2 years ago this happened. What was the headlines here? But definitely a buy. Buy low, sell high. It's definitely the double bottom situation, but it could bob around here and crush people. It could go down and nick that wick and then just go ripping up. So you got to be prepared for that next week. Or tonight, right? Could go down there tonight. Here's the... It looks like easy buy setup here for just range trading. That's like a range trader's dream right here. Holy crap, this thing goes nowhere. This is low risk, you know. Look at this. Not too bad. Spread's not too bad, I guess. God, the other markets just look like, Jesus, you got to be on your toes. Like, hey, you put a buy limit down here. The obvious buy limits here are at last known high. Looks like a real, especially wait for this guy to get stopped out by his stop off him. Put your buy limit there. And they just put buy limits all the way. This is what it would have to look like if you're going to actually trade this damn thing. Hey, a bunch of buy limits like there for the whole day, for the whole week. If you're bullish, you don't give a hell. You want to buy as low as you can into this. Like, I guess for the fractal trader, you're going to put your buy stop on top of the swing high. Not on that wick, but on here, right? Not on the wick. I know a lot of people think that's the fractal. It's not. I'm so sorry to tell you. That's just the closing price. Because this takes into account volatility. It doesn't get any better than everything being on one thing, right? Here's the doji, right? Any zigzag doji. Don't worry about all those. I mean, your orders are going to look like this. It's going to look like a mess, right? These are all buy limits. If you think it's going up, and of course you can do the channel, which would be a lot more conservative entries to get in a retest of this channel. You may have to wait for it to drift into that. And if it coincides with your last known low, this stuff has to coincide or it's pointless. You can draw into the past, but you cannot trade you can't trade the left side of the chart. That's what they're telling me. The broker said right down the disclaimer. So yeah, your targets are just going to be like, okay, but you can't expect too much out of these markets. That's one thing I notice. Usually like a bad relationship. They go south real quick. Okay, so I don't know if I duplicate any currencies down here. Australia to the dollar. Okay. So I just went long this thing. I do think this is the first one to turn. I just put in, it's a demo account, I just put in buy limit orders. I'm like way up on this trade because I hillbilly traded it. I just put my orders at this pivot. Look at this breakout pullback. This thing's going to march north. I think this is going to do some serious house cleaning. I don't think people are going to appreciate it when the U.S. Doesn't change interest rates. So if gold's going to make another rally, if you went sideways in gold and a lot of people are having to head for the hills now, there's a lot of stops to clean out here. Once they break this, I'm going to rip north now. I think it's done for the dollar against Australia. And you can say you're a trend trader, but wow. I think you got a problem with this trend line break. You can make the argument for this trend line hasn't broke, but gosh, you're kind of breaking it right now. I mean, that's getting like, forget about it. Not that it can't go down after it comes up into these white lines, but for the moment, this week, it looks like there could be a severe smash. Big smash coming here to the north side, at least for just to get the hell out. The exit doors obviously here. One man's buys, another man's sell. That's the revolving door of trading, and certainly people are going to try to sell here for a continuation trend thing. They're going to get their head handed to them probably, because if we bang up against this thing, get trapped here, and it goes into doji mode, then it's just going to start cleaning house all the way back up into here. Right? I'm just saying, this is a huge triple bottom that got taken out in this triangle. So, but definitely, it's going to be like next exit. If you're long, next exit got to be here and got to be here where they're going to grab, and this will be the place to scalp in the other direction. But these stocks, when it starts clean, if it just goes up here next week or two, starts cleaning house, it'll go into one of these 300 pip moves or something. But along the way, there's just too many trades. I mean, this is a weekly chart, for God's sake. It's take forever for this thing to go through its cycle of madness. And the good old dollar to the pound. Another no-brainer entry. Put a buy limit on the down here, obviously. All the way down, actually, I just put a bunch of them in on the open. We ricocheted off this, but I think it's going to be a problem. We're going to get above that. Trend line of breaks way out there. So if you really want to aggressively trade, you're waiting for a break of that. Okay, what's the next? The psycho pair, the depegging of the pegging. Of course, who couldn't see that coming, right? You didn't need a PhD for that one either. That was a little drifty, and the big trap up here. Like, whoa, yikes! Well, look how this became resistance. Wow, what a place to sell, huh? Classic. Another example. Closing prices beats wicks all day long. You copy that over. You see the. So yeah, it could rally up in here, but maybe people are going to dump it. Dump the dollar, go to the Swiss franc, but I guess it could still beat the Swiss franc. Who cares? I'm not in this trade, but here was the scalp entry, obviously, right? Your buy limit's sitting at this previous. If you're bullish, you know, the market looks like this for you. Of course, you just broke your trend line, but I guess you have to draw a new trend line. And when these things start to melt down, you'd be moving your trend line down here by then, and then you'd be still trying to make the argument. I guess the most bullish argument is to pick this internal. Gives you a little bit more breathing room, I suppose, but then you've got to assume that that channel's got to project off of at least here. The new channel. If it's going to start to go sideways, the channel's going to decay. The energy is going to decay. You should be able to plot the momentum, loss of momentum on here. So you could do a million lines on here to Tuesday, I'm sure, right? You could just keep saying, look, everything's kind of just losing its, because this is not a big mover, right? Unless you're on this trade, unless you bought that wick. It's not a big mover. It stays on the shelf a long time. It's not a big mover. And here's the amazing guppy, just psycho. This ridiculous. Now you need a lot of money in your account for this. A lot of pips available. Look at this. Come back here and buy. I'll buy it if it comes back there. Here's the bottom that became the top for a moment. So see a buy. And current trend line to break for the bulls. Bulls, people that want to get on this train. Of course, it could be over. This could be just like the dollar CAD where it melts all the way down now. This major wedge. You know, forget the wicks. You know, wicks are just meaningless for a trend analysis. Because trends are priced over time, they're not moments in time. You know, one day doesn't make a trend, so I don't know why people put their trend lines on the wicks, because one day doesn't make a trend. There's a wedge forming there. But you could still keep screaming all the way down to here. Not screaming, but we can melt off it, bounce off this. That's kind of a bent channel, so it's like a cone channel. Strict channel would be copy this parallel over to here. So for the bears, they're thinking, oh yeah, I could make it down there by there, you know. But there by there, so that's my big rundown on the weekly Forex review. Of course, I cheated and used the dollar CAD twice. I can't keep track of this many pairs. Honestly, I don't even know if I did the pound twice. The guppy, New Zealand. I mean, these spreads are psychotic. Just to warn you, the spread here closing is 40 pips. So if you like to trade this pair, and God knows, look at the range trading back here. For the love of Pete, look at this. If you don't care about trend, look at that. Be like binary options on this thing all day long. Look at that thing. It's trapped. This breakout here, that is severe. Pound to New Zealand? Man, something's up. So, this is ridiculous. Look at this wick. Did you ever? Man. So this thing is setting up for, if you're into, like, if you got deep pockets, you can trade this puppy. It's like trading the Turkish lira, I think, against the Mexican yuan. Look at this thing. Forget about it. So look at this top become a bottom here. How about that? So look at this thing. Wow. Man. Totally nuts. I think we could totally, there's actually a doji right here. Anytime it goes flat like that, it's like a hammer. This thing sweeps down into here. Of course, this is the bullish dream. Comes down here. Starts cleaning house to the north. It just goes out and takes out that high. Of course, this would be great if this was like a, I don't know, a 5-minute chart. And the news just came out and they just rammed it down here. I'd be, oh, yes, scalp to here. Let the rest ride. See ya. That's the way to trade. Look at this. Double bottom became a top. You had your whole life, you had your whole year to see that setup coming. And always the stop hunt. You sold on close, did you, at the pivot? Oh, we got to go after those. We got to trap those. Trap them in a 100 pip window. They think it's going up, do they? Oh, we'll see about that. So, classic traps. Mind the gap. You know, when you're in Canada, it says mind the gap. That's when you're in a subway. You don't want to catch your feet in these traps. Like when they're breaking out, everybody's like, yeah, man, it's bullish. We're in an uptrend. I'm like, yeah. We're also correcting all the time. We're always counter trend trading at the same time. It's just what breadth of the market are you in? So if you just look at these, this is 100 damn pips. I guess so. Is that right? So that's like, you know, you just have to have giant guppy pockets to trade this thing, right? Obviously, right? This is psycho trading. So I'm not up for that because it's just too expensive. I would rather just be on a 5-minute chart for this ride and make a bunch of money, get out, be done. Okay, next trade. Oh, going to sell up here. Okay. Wait for the end of the day. If this is a daily, if this is a 1-hour chart, this looks like the news on a 1-hour chart. And I guess this news must have been pretty severe here. I don't even know. I want to look back, but you don't have to. I mean, you can just see that it's ridiculous. If you had a trend channel on this thing, look how steep this is. My God. I mean, a child can see that. It's unsustainable. Look how they tag it. They didn't close there, but they tagged that. So your limit orders are sitting on that trajectory and close on this channel. You can't. Well, you could build a wide like this, but you want to go for the last known high in there. Yeah, you would have got filled on that. If your stop was too tight, they crushed you by 3. You had to have a 500 pip stop on that to trade that. And that probably happened in a moment. I don't even see any close. It literally came all the way back to the starting gate. You got to realize the breakout point for the time, this double top, it came out. Oof. You said you bought? Oh, wait. Explain this trade to me again. You bought here, and then you moved your stop to break even, did you? Oh, okay. So you didn't take anything off the table when it was up here? No, absolutely not, because I'm bullish. I'm not saying that. Well, I'm not saying I wouldn't be dumb enough to do that trade, right? But we've all done that trade, right? Where, you know, you're in big and you're just. Now, this is another big fallacy, big myth is, you know, well, you got to wait till the target's hit. No, you don't. Not if you just tripled your account. No, you don't. You should just get out and then trade like a little old lady after that. You know, of course, these days, I guess that could be dangerous too. When people are killing people out there. But yeah, these kind of, you know, this wigwams setups here now, if you're looking at the Gann grid, which I won't get that out and torture you, but you could set your own last known, you know, harmonic here, right? If you're a harmonic trader, you don't need to have all this Batwing stuff going on. I don't get the ABCD count. Like if we were in the middle of a fight, I wouldn't wait for you to throw 3 more punches. I would just wait for the next window of opportunity to punch you. I wouldn't wait. This sitting on your hands stuff is never going to work for me personally, so I'm very much a scalper. But I can understand people that want to wait for setups like this. So no offense to the video I did there of this guy, Jason Stapleton, who literally has setups that are just mind-boggling, like you can't believe this is going to happen. But I would get very close to the market. I can say with all certainty I'd be buying at least 200 pips deep to 500 pips deep on here on every 100 pip handle without question. And now you just have to have enough money in the account. I'd swing trade this thing. This is an amazing currency pair. But, I mean, I'm not going to sit here and babysit this thing at a 40 pip spread. You know, it's ridiculous. Especially Asia. You can't even trade the thing. Just stick to this. Stick to the euro dollar, people. Okay, that's what I'm trying to say. Now here you can go down to any time frame and trade this thing. Look, the spread closed at 6 pips. You see a lower spread on this thing? The only thing with lower spread is oil, and I can't do the math on oil, but anyways, the other tight spread, I guess, was here. Just by luck. It was 83 pips. That's 63 pips. So. I would say buy the Australian dollar. It's the next thing to crack. That should push gold. That should push crude up. Break this trend line. Should, you know. It's all shoulds. And looks like New Zealand, you know, or this could still come back retest. But hell, I'm just amazed at these markets, you know, so many pips, and you got to pick. This is a low pip risk thing here, I think. But this is pretty rangy. Very rangy. Certainly the sell limits have to be up here, obviously, where everybody's got their stops for the scalp. And if you think it's going to keep going down, which is kind of hard to believe at this point, but I guess you're going to sell here. Pulls back. Get the hell out. I guess if you sell, you got to get out here at this last low on top. They'll come down, they'll trap these guys, and they'll rub. So they'll be trapping and baiting. It's like a rope-a-dope thing. Come up, trap these guys, back foot. So you really got to be bi-directional. You got to be to make the most amount of money. You want to buy and sell. And just when you see a big screaming up move, you're selling, and we screaming down move, you're buying. If it's screaming and yelling at you, you want to scale into that. If you see any of that behavior out there, you got to fight back and buy into, sell into psycho rallies and buy into psycho pullbacks. And at least trade for the scalp. And then, if you have somebody that you can trust to place orders for you that has no clue of what the market is, that'd be the best way to go. Preferably get a good-looking person to do that job. But you could have a one-eyed person, you know. So somebody that can place order and just come in and put in all those orders that you can't trade. Like for me, I couldn't trade them. So, yeah, I'm looking for homeless people to place orders basically on their tablet, on their Obama phone. So anybody that's up for that, just place all your orders out there. And then just like, it's like better than lottery tickets. So if you're going to risk $5 on a lottery ticket, just put a 50 pip stop on a 1K. And don't be stingy. You know, put about 10 orders in there, so risk $50. You risk $50. 50. You basically take 10K and split it up into 10 pieces, and you can just place those orders on your phone at night. You know, you can just place those orders in the subway on the way to work. You know, you don't have to sit here and try to. And go for the low-hanging fruit. I mean, if a market's really close to entry, well, for God's sakes, you know, pepper the thing with some orders. I mean, you have to do the math, though. I know there's an issue. You got to do the math. You got to figure out, okay, do I risk 20 pips, 30 pips, 40 pips, 50 pips on 4 different styles of orders? So you have a spectrum of stops. And then the other one's a spectrum of take profits. But you have to keep them realistic. You know, we all know the retest is coming. If it's coming, you want in on it. So those orders that you space at the edge of the market need to have different entries and different exits. Each stop, take profit, and entry has to be completely different. It takes more work though. This is like painting with dots. You dot painter, you have to paint dots. 1,000,000 dots, maybe not 1,000,000, I don't know how many, 10,000 dots, right, on a painting. And then it looks like an image when you're done. So the same thing here, like if you're going to trade a sweeping move in the market, if you're going to be in that trade for 3 weeks, then you're going to scale into that thing, right? Because you don't know, you're looking for the first cheapest thing to get in, and maybe 50 pips south of where you're at, because you know it's going to go down another 50 pips. It's in a downtrend, right? I mean, if you don't get filled on that by the end of the day, every day that goes by you don't get filled on your 50 pip deep order, you start buying at the market. Because guess what? It ain't going there. And you want to be in that trade. You want to be in on that swing, entry, scalp, whatever it is. Get the hell out, bank some pips, maybe dump the whole thing because the feeling of missing out, it's going to pull back. I mean, the guppy's going to pull back 20 pips while you're just taking a breath. You know, I mean, it's ridiculous. So a lot of people, I know that a lot of people trade all these currency pairs, so I thought I'd do the weekly here, but honestly, I just don't see the point. I can't focus on all these pairs, and it's too much like, you know, it's too much to manage. I'd have to have a team of people, so I can only trade one pair at a time, and I just go for trading's a business, so I just trade the euro dollar because you can't even trade the pound. You know, the spread's too terrible, you know. So the pound was a big disaster trying to build a platform on the pound because its spreads suck. You know, I mean, even on a really tight broker, they suck compared to how many pips it moves. You have to, in other words, the dynamic range of the market is not set up for automated trading or any type of like if you want to take advantage of the fact that you are trading automatedly, you have to trade the euro dollar. Because you could take advantage of the tight spread. Whereas if you're doing swing trading and your order is 80 pips away from your end, like when the market's at now, yeah, it wouldn't matter, right? You could just all day to place that order. But if you're going to scalp, high frequency scalp, you're going to just be naturally on the euro dollar, which is an easier, cheaper, jeez Christ. It's a cheaper way to make, it's a cheaper, not cheaper, it's a lower risk window because you're only going to be in the market. You can look at a 5-minute chart and you can babysit a 5-minute chart and make a living off of it because you can get in on the market very quickly. It's very liquid. So if you cannot do that, if you cannot sit on your hands, you need to be on the euro dollar, I guess is what I'm trying to say. At least for me, I just noticed it just not fit for me to, and I can look at all these pairs, and I guess it's every time I watch a video, these people go through all these pairs, and I'm like, you've got to be kidding me. This is literally like, okay, well, you know, you have 5 girlfriends just on your street alone. Like, how are you getting anything done? And how are you able to even focus? I can't get my brain around these setups. I mean, I watch people do the setups, and I realize they're swing trading it. I mean, they have their entries are so wide. I mean, they're looking for not only for Martians to land on the Earth, but they're going to land in a certain continent, not even a certain city, but they. I mean, it's almost like asking the aliens to land in your backyard in some regards to people's idea of the entry for the next move. Some of this stuff is like a flash crash entry. Of course, I mean, I guess I see the wick and I wonder, how do you make money from that? I just watched the video where the guy says, oh, you know what? You can't avoid that stop out. I'm like, well, that's the whole point of it, is to be have your orders at the edge of the market where people just can't believe it. And this stuff only lasts a couple minutes sometimes, these prices, and sometimes these prices last 15 minutes and then forget it rips the other way. Now, if you capture that window on a currency pair, you only have to do it on one currency pair because that trade makes so much money in such a short period of time. And just by the sheer fact that the market got to a popular price where there was a lot of excitement, or there was a lot of people there was just more orders there being filled, and then it goes and reverses or it continues, right? If it pauses, then you want to trade a whole different style when the market goes sideways. So when the market's on fire, you better be in before the market explodes. So all your breakout orders are stacking up, and if you're drifting sideways, put some buys and sells, hedge it. Don't pick a direction. Just go with the order flow. And if you're looking at these, like these people have these, it's cracking me up all day long, these bat wings and stuff and ciphers. I guess it's the flavor of the month trading club. But, I mean, you're really asking a lot of the market to go through to make certain moves, and you're just, I don't know, it's like planning, trying to plan 8 steps ahead in chess when you can barely do 3 against, if you barely just get 3 mapped out in your head and hold them in context. Now, if you had to play chess against 16 currency pairs, I mean, you're a master chess player. You're like in this gaming room where you're walking around and you're just, oh yeah, I'll do this. Yeah, but you cannot kick. If you're playing against a bunch of kids, right, you could do it. But, it's a lot to pay attention to. If you got orders you don't want to be in there, how can you track down these orders, right? You got to track down these orders. You trade all those trade plans there, and I guess you could hunt. You could. I guess I'm assuming a lot of what people are used to, but I mean, who hasn't been in the market and seen their equity swing? I guess what I'm trying to say is, how much punishment can you take? I mean, nobody wants to talk about that either. They don't want to talk about how tight their stop is, how big they're, and they never talk about money. I noticed that. Well, the course costs $3,000. Well, hell, you could lose $100 a week trading, and you'd figure it out real quick. I mean, it doesn't take long to just notice what the market's doing and say, oh, I see, that seems to happen over and over again. You don't have to go very far. It's just about the money. Nobody wants to talk about it, right? So you could definitely go through micro count after micro count, and you determine pretty much what works and what doesn't, right? And then from there, it's about how do you feel about the amount of time you have to be in the market and feel that pain of your equity swinging. The trade's not over to get out. So when you go flat, can you handle being flat, and can you handle being in the market without any type of emotional connection to it? So that's kind of, but you have to pick your exits. I mean, you cannot get in these trades without an exit. There's no point. You could, if you're scalping, you can sit in front of your screen and just pull the trigger, boom, I'm out. If you're babysitting on a 5-minute chart, yeah, you're just gonna get out, or even if you got scared and got out with a slight loss, you just get back in. I mean, market's constantly vibrating up and down. But I don't know, the whole thing, moving averages, all that stuff. I mean, it's mind-boggling how people want to throw a indicator gauge. It's like indicators on your car. It tells you what the temperature of oil is, but is that really the temperature of oil at the core? No, that's where the sensor's sitting. So everything's outside of when it's really going on. And if the market's smashing down and you're long and you're getting killed because you're in too big, it's going to keep you from buying a really good buying opportunity, because you just don't have that balance point between being in and out of the market. And even if you're not in the market and the market's moving, people consider that losing money because it went up without you, and they take that as a loss. That's considered losing. I mean, a missed opportunity is considered a loss. So if you've already got that psychologically hitting you, now in here, if these were hourly charts, I'd just be dropping buy limits here, buy limits there, walk away. If they could push that market down and fill these buy limits, I'd put here or here. I'd be buying the yen all next week, right? Because that's what I like to buy. Buy low, sell high. So I'm looking for that to sweep down and a logarithmic style move. And that's my my entry technique, is that this is ridiculous, these sell-offs here. This one, like I said, I think the dollar CAD is going to melt. But yeah, anyways, that's my 2 cents.